Welcome to this explainer. Today, we're unpacking a pretty wild situation, how a tiny European nation capitalized on an unprecedented global energy crisis to build literal multi-generational wealth. While much of the world was scrambling and reacting to sudden energy shortages, one country was quietly executing what is basically a financial and logistical masterclass. Let's dive into it.
It's kind of the elephant in the room, right? The question nobody really wants to ask when their monthly bills are shooting up. Who actually gets rich during an energy crisis? Over the last few years, while Europe panicked over skyrocketing gas prices, empty storage facilities, and a really scary dependence on foreign energy, a nation of just 5 million people on the very edge of the continent was quietly building an economic empire.
All right, let's jump straight into Section 1, Il Paradosso Energetico, or the energy paradox.
To really grasp the scale of this paradox, we just have to look at one absolutely staggering number, 30%. In 2024, Norway alone covered over 30% of the total gas consumption for all of Europe and the UK combined. Think about that for a second. Nearly a third of an entire continent's gas needs, completely fulfilled by a country with a population smaller than the city of London.
The sheer scale of their operation is just hard to overstate. We are talking about a nation that provides 3% of the entire world's natural gas and 2% of its oil. In 2024, they pumped out 1.6 million barrels of oil every single day. Oil and gas make up 57% of all their exports, bringing in roughly 90 billion euros. And what's really fascinating is that Norway is actually a net exporter of completely green hydroelectricity themselves, so they just take 95% of their natural gas and direct it straight into the European market, establishing absolute dominance. They aren't shipping this across the globe, they are the local powerhouse.
Moving right along, Section 2. Il sostituto perfetto, the perfect substitute.
So picture this scene in 2022. When Europe urgently abandoned Russian gas, they needed alternatives fast. The U.S. definitely stepped up with liquid natural gas, but consider the friction involved there. American LNG requires a massive, complex supply chain, liquefaction, transport clear across the Atlantic on massive ships, and then specialized regasification facilities once it finally arrives. Conversely, Norway's pipeline gas is immediate. It's geographically close, politically super stable, and directly integrated right into existing European infrastructure. It just literally flows.
And because of this unmatched, frictionless infrastructure, the windfall they experienced was immense. According to data tracking their exports, Norway earned an estimated $140 billion more in oil and gas exports between 2022 and 2023 compared to their 2021 baseline. Let that sink in. Some estimates even push that surprise surplus up to $170 billion.
Which brings us to Section 3, La Macchina della Ricchezza, the wealth machine. Now here's where it gets truly fascinating. The masterclass isn't merely in extracting the energy or laying good pipelines. Any resource-rich nation can do that. Instead of immediately spending this massive influx of cash on domestic consumption or short-term political wins, Norway funnels it directly into their sovereign wealth fund, the Government Pension Fund Global. Their philosophy is elegantly simple. Oil and gas will eventually run out, so they extract finite energy today and transform it into a self-sustaining, money-printing engine that will benefit Norwegian generations long after the last drop of oil is pumped. So, the crucial takeaway here is that this fund is now worth over $2.2 trillion. $2.2 trillion. It is an astronomical figure. And remarkably, by 2025, more than half of the fund's total value actually came purely from investment returns, not from the state just depositing oil money. The machine is literally feeding itself at this point.
And they certainly aren't just stuffing this cash under a giant national mattress, right? It's an aggressive, forward-looking portfolio. With 71% of it invested in stocks, Norway holds shares in roughly 7,200 companies worldwide. That means a country of 5 million people effectively owns about 1.5% of all listed global equities. Think about that. They are one of the single largest financial investors on the planet.
All right, let's look at the numbers on the ground in Section 4. Profitti fuori scala, or off-the-chart profits.
To really ground this macroeconomic theory, we need to look at the corporate engine driving all this. Equinor, which you might remember as Statoil, is the beating heart of Norway's energy sector, and it's 67% owned by the Norwegian state. During the absolute peak of the 2022 crisis, they posted completely off-the-chart profits, roughly $75 billion in operating profit, leaving almost $29 billion in pure net profit. And guys, this isn't just a 2022 story.
Any global shock benefits them. For instance, recent tensions in the Middle East around Iran and the Strait of Hormuz automatically pushed energy prices up globally. According to Robert Nays at Nordea, that added an estimated $8 billion to Norway's bottom line in just a matter of weeks.
To put that corporate boom in perspective, if you were an investor back in 2020 during the COVID crash, Equinor was sitting at around $8 a share. By 2022, it exploded to over $40, nearly 400% growth. And just in recent weeks, triggered by those Middle Eastern geopolitical tensions, the stock essentially doubled in value again. It's wild.
And that leads us to our final part, Section 5, Mercati e polemiche politiche, Markets and Political Controversies.
Generating unprecedented, historic wealth while your neighboring countries are suffering economically is naturally going to spark some intense geopolitical scrutiny. Take claims from figures like Donald Trump, who accused Norway of intentionally price gouging the UK to double their profits during market tensions. It is a really potent political accusation, but we need to impartially examine the actual mechanics of how European energy is priced to understand what's really happening behind the scenes.
Because the reality is, Norway, as a state, doesn't just sit in a dark room and set the price of their gas. The price is strictly dictated by the TTF, a Dutch virtual trading point that functions as the primary market exchange for European gas. It is based purely on global supply and demand, so Norway simply benefits passively. When global supply drops and panic sets in, the TTF market price organically doubles. And well, Norway's revenue doubles right along with it. They aren't actively price gouging, they're just catching the rain in a very, very large bucket.
But even if they aren't setting the prices, the sheer volume of that passive profit has triggered massive debates. It's very analogous to the windfall taxes levied on banks when interest rates go up. Many people argue that because Norway is profiting from geopolitical tragedy, they have a moral obligation to step up. There is rising political pressure on Oslo right now to vastly increase their economic and military aid to Ukraine. Simultaneously, Norway is using its massive financial weight to make its own geopolitical statements, like recently when their sovereign wealth fund completely divested from international companies tied to the ongoing Middle East conflicts.
Which leaves us with a truly fascinating dilemma to ponder as we wrap up. Norway has undeniably executed one of the smartest economic strategies in modern history, protecting its future citizens by converting finite resources into a multi-trillion-dollar permanent asset. But that wealth is heavily accelerated by global instability. So I'll leave you with this. Where exactly is the line between smart market economics, benefiting passively from windfall profits, and a nation's geopolitical responsibility to its neighbors? It's a complex equation, and one that's only going to become more relevant as global energy demands shift. Thanks so much for joining me for this explainer. I hope this breakdown gave you a clearer picture of the real mechanics behind the headlines.